Hello friends, welcome to the target series for this May 2026. Now this we are keeping the target of clearing the exam in the first attempt. For that we are bringing special sessions. Various sessions are taken regarding RBWM, PPB, AFM, IIFS, all of them. Follow them till the end. Follow all the series. Follow all the mentors. Like the video, subscribe to the channel, click on the bell icon. Don't miss these. Okay? Today we will be covering Introduction to Retail Banking, chapter number 1. Very important, very basic. It lays the framework of the entire banking framework, basic framework. What is retail banking? What is the role of this retail banking? Everything is covered. History, all of the points. So, today I will be covering some important concepts, means questions, and based on this concept, I will be covering the case study also. One important case study. So don't miss this. Let's start. Which of the following is not typically considered a core service offered by retail banking according to the paragraph? Paragraph means basically the chapter. Okay. Which of the following is not considered as a core banking service? So, personal loans, savings account, certificate of deposit, and corporate underwriting. Which of them is not considered? Kindly note the question, not. Okay, not typically considered as the core service. Personal loan, savings account, certificate of deposit, and corporate underwriting. Now, many of you have got might have got confused over here. Why? Many of you might be thinking, sir, this we know, but certificate of deposit, we have never seen it. Corporate underwriting, we have never seen it. So now there are two correct answers. Not. So these two are not there. Now you have to think. What do you mean by this? Which one of these is done by the banks, retail banks, and which of these is not done by the retail banks? Think. What do you think? Think. Everyone think on this. Yeah? Everyone, yes? Think. So, which of them? See, the point over here is, kindly note, certificate of deposit. Many of us think we don't know, but they are actually given by the banks. FDs, what we call FDs, fixed deposits, they are also given as CDs, certificate of deposits. So, this is a part of retail banking. This is not the part of retail banking. So, the correct answer is this one. Correct means not typically. See, correct means not the part of retail banking. These are the parts of retail banking. Personal loan, savings account, CDs. But this is not the part of retail banking. Got it? Everyone? See this. Corporate underwriting. Savings, current, operating accounts, mortgages, personal loans, debit cards and CDs are services. It does not mention underwriting, which is a corporate wholesale function. So, underwriting is a part of corporate banking, not retail banking. Okay? What role do fintech companies play in modern retail banking landscape? See, so typical question. Modern retail banking is all about fintech only nowadays. Technology. Right? You might be seeing the majority of the customers prefer dealing in fintech, means directly in online banking. They don't want to come to the branch, right? What is the role of the fintech companies? They only provide advisory services. They compete by providing the same services as banks via apps. They operate as subsidiaries of local community banks. They exclusively handle wholesale transactions. Think. Yes, fintech companies, what do they do? What do these fintech companies do? actually? What is the role? Do they provide only advisory? Do they compete? Or they operate as subsidiaries? Do they operate as subsidiaries of community banks? Local community banks? Yeah. Or exclusively handle retail and wholesale transactions? Very typical one. Many of us don't know this. Okay. But the answer is B. They compete by providing the same services as banks via apps. What is this? Fintech companies are giving the banking services. What do you mean by this? Google is providing loans. Amazon is providing loans. There are many neobanks. Neo means what? NEO. Neobanks. What are these neobanks? These neobanks are fintech companies. They are operating as banks. So kindly note, banking is not limited to nationalized banking or private banking or cooperative banks. Banking has grown a lot. It has grown from the premise of banking to some NBFCs also. Even NBFCs provide majority of the services in the banking now. There are many crowdfunding companies, Keto. They are also providing loans, kindly note. So B, they compete by providing the same services as banks via apps. The passage states, means this topic chapter states that in digital age, many fintech companies provide all the same services as retail banking through internet platforms and smartphone apps, right? So their cost is also very less. Many of these neobanks, their cost is much lower. No employees, no branches. So they can give whatever rate they want for loans. Look at this, where we are, where the banking is going, isn't it? Next. What is the fundamental purpose of retail banking for the individual consumers? See, fundamental purpose of retail banking for individuals. See, we are talking only of individual, okay? To manage money, access credit and deposit funds in secure manner. To follow the money of the customers for own profit. Purpose of retail banking is own profit. To follow the money of the customers for profit of the corporates. And none of the above. So, what is the fundamental purpose? What do you think should be the fundamental purpose of retail banking? Think. To manage money, access credit, deposit funds in secure manner. Yes, the answer is obviously, isn't it? Look at the answer, isn't it? To manage money, access credit and deposit funds in a secure manner. That is the job. How can you have your own profit? Means profit is necessary. But profit means not only your own profit. You are basically, what is banking? Retail banking is a link between the depositor and the borrower. Right? That is the basic logic. So you have to perform this function, and in between what you get is known as spread. That can be a profit, but you should not aim specifically for this profit. Okay? And corporates, that's obviously out, isn't it? Retail banking as a way of individual consumers to manage money, access credit and deposit funds securely. Securely is an important word. Okay? Securely. If people lose trust in your bank, they will never come back to your bank. Very important. Trust. Okay? Which of the following best describes the entities that provide retail banking services? So what is the one which provides retail banking services? Only local community banks? Only divisions of large commercial banks? Both local community banks and divisions of large commercial banks? Only non-bank financial institutions? So who provides banking services? Local community means what? You can call it RRB or cooperative banks. Okay, RRB and cooperative banks. RRB and cooperative banks. Okay, so any of these, you can think of it. Okay. So the answer is both, isn't it? Answer is both. Both local community banks and divisions of large commercial banks. Okay? Look at it. Typical answer. Both of them. Okay? Getting this point? Both of them. Got it? Next. What are the advantages of retail banking? Client base will be large and therefore risk is spread across the customer base. Think of it, everyone. Customer loyalty will be strong with a good scope for cross-selling, and customers tend not to change from one bank to another very often. So this is one of the greatest advantage of retail bank, isn't it? Attractive and wide interest spreads since customers are too fragmented to bargain effectively. Credit risk tends to be well diversified as loan amounts are relatively small, and all of the above. What should be the typical answer? Think. What should be the typical answer? It should be correct, all of the above. Okay, so these are the advantages of retail banking. What are the limitations of retail banking? Problems in managing large number of clients, especially if available IT systems are not sufficiently robust. Okay, available systems are not robust. Many times it happens, isn't it? Rapid evolution of products can lead to IT complications. Today any product is, you've got any product, you brought a new product, tomorrow it becomes obsolete. There might be hacking, so anything can happen, isn't it? The cost of maintaining branch networks and handling large number of account transactions tends to be relatively high, right? Is it so? That's also a point. Maintaining the branch network and handling large number of customer account transactions, it is really high. So the answer is all of the above. Okay, all of the above. Got it? Clear, everyone? Now next. Okay. Which of the following statement is or are correct regarding the artificial intelligence technology part? Which of the following are correct regarding the artificial intelligence, AI? AI, artificial intelligence or AI refers to software technologies that make a robot or computer act and think like a human being. The concept of AI and automation are the same. Only one, only two, both 1 and 2 are correct, and both 1 and 2 are incorrect. So which of them is correct? Yes, what is the answer? First one is correct, you know it. First one is correct because it makes the computer or robot think like a human being. So that is true. Only problem is second one. The concept of AI and automation are same. Is it? Automation means related to this machine working of the machines automatically. But AI is a step ahead, much ahead. So this concept is not same. That is false. So only one is correct. Only one is correct. Okay? To improve ROA and reduce variability in performance, banks need to take a forward-looking windshield-based approach to performance management rather than backward-looking rear-view approach, mirror-based approach. This would include which of the following? So to improve the ROA is an important topic in your chapter number 3. Yeah, branch profitability, module A. Okay. So to improve the ROA, simple, such a big question I'll give you in simple line. Do we need to look forward or do we need to look backward? That's the only question to improve the ROA. Clear business and financial model across its portfolio of business and products to create roadmap for the ROA improvement. So what should I have? Strong framework and planning cell in the CFO's office that translates growth, pricing, profit, and capital improvement initiatives into the plans and budgets. Periodic report and review mechanism that distinguishes between routine operational plans and strategic growth plans. And B is effectively tracks budget variance and converts them into actionable items. And D is all of the above. So that is the simplest answer, all of the above. All these are so big. Firstly, think over it. ROI, return on asset. How do you increase? What is return on asset? Return on asset means my net income divided by my assets. These assets should not include NPAs. Okay, they should not include NPAs. Clear? So, to improve the ROI, what do we need over here? Clear business and financial models. That is true. Strong framework and planning cell. That is also true. Periodic report and review mechanism. That is also true. So, the answer is D. All of the above. Answer is D. All of the above. Got it? D. Next. Among the following, which of the following accounts include a value additions like internet banking, mobile banking, tagged insurance cover, personal accident cover, sweep in, sweep out facility, other concessions like free remittances? So which accounts will have all these facilities? Internet, mobile, tagged insurance, personal accident, sweep in, sweep out, free remittances, saving, current, term, combination deposit, all of the above. See, 5 options are given over here. Is it for saving, current, FD, combination? What is combination? Combination means a combination of FD and saving or FD and current. Okay, that is the combination. You can call it sweep in, sweep out also. That's also a combination account. So which of them is correct? Which of them is includes all these? Means internet banking is given in which product? Is it given in savings? Yes, it can be. Current? Yes, it can be. FD? It can be. Even in FD, I can give you this internet banking. Combination deposit? Yes, I can give. So all of them, if you see, all of them. Mobile banking. Can I give this? Means, can I give mobile banking in savings, current, FD combination? Yes. Can I give insurance cover? What do you mean by this tagged insurance cover? This is the sales pitch. What do you mean by sales pitch? Means if I am not able to sell savings account, I want to increase the sales of savings account. What do? I'll just open a cover, insurance cover, free. You open the savings account with me, I'll give you 1 year health insurance free. Similarly, open a current account, health insurance free. Open a FD, health insurance free. Open a sweep in, sweep out, health insurance free. So, insurance cover can be used as a sales pitch for selling any other product. Personal accident cover, sweep in, sweep out facility. Sweep in, sweep out means what? Sweep in is known as, suppose if I am having a FD and there is a check which has come in the clearing. So this FD gets broken and funds are transferred automatically to the savings account. So that is known as sweep in. Okay. Other concessions. So the answer is basically all of the above. I can use this for any of the products. I can use it for any of the products. Okay. Whichever I want to sell more, I'll give all these. Isn't it? ROI trees can be viewed using multiple lenses to manage performance across the various, which of the following dimensions. So ROI can be used for measuring the performance in which of the dimensions? By business unit, desktop, desk and product, by transaction, counterparty, customer type, by geography, all of the above. Where can I use ROI approach? I can use ROI approach in all of the above. All of the above. Kindly note. I can use ROI approach in all of the above. Okay. All of these. Okay, business unit wise also I can do ROA, return on asset. What is ROA? Return on asset basically. How much am I earning upon how many are my loans, or what is the amount of my loans? Transaction counterparty, I can do it for this also. Geography based, region wise, I can do the ROI. So all of these. An education loan for maximum amount, what amount is given for studies in India? Now here kindly note education loan, okay, I'll give you the option E. All of the any amount. Any amount. One more option I'll give you. Any amount. So how much can you give the education loan? 10 lakhs, 30 lakhs, 5 lakhs, 25 lakhs. Yeah. It is for any amount. Kindly note. Education loan can be given for any amount. Only the point is the bifurcation is related to your priority sector. For loans for education in India, Bharat, I can give the education loan up to 10 lakhs for priority. This is only for priority sector, priority. Otherwise, if I want to give the commercial loan, commercial education loan, so I can give it for any amount. Bharat, priority, and outside foreign, it is 20 lakhs. That is all under priority sector. This is under priority sector. Kindly note. Okay, it is under priority sector. Other than priority sector, if you want to give a loan of 80 lakhs to anyone, education loan, you can give. Nobody can stop you. Okay, because after all, we are a bank. The government of India has allowed dash FDI in insurance sector. Insurance sector, how much is the FDI allowed? Foreign direct investment. This is a typical question, tricky one. It is 74%. 74% is allowed. Okay? 74%. Which of the following statements regarding NBFCs is not correct? See, question is not correct. Which of the question on this points are not correct over here? A company with the principal business of accepting deposits is not an NBFC. Principal business of accepting deposits is not an NBFC. NBFCs don't form part of the payment and settlement system and cannot issue checks and drawn on itself. So it cannot issue the checks basically. So you want not correct. Okay. Deposit insurance scheme DICGC is not available to deposits for NBFCs unlike in case of banks. Okay. Which of them is not correct? Huh? Yeah. So NBFCs are regulated by RBI, have a minimum net owned funds of 200 lakhs. So which of them is not correct? Not. Okay. Yes, think over it. See, I'll go one by one. NBFCs are regulated by RBI, true, and minimum capital of 200 lakhs. So that is also true. Deposit insurance facility of DICGC is not available. Not available to NBFCs. That is also true. That is only available to your banks. NBFCs don't form the part of the payment and settlement system and cannot issue checks drawn on itself. Okay. Can they issue the check? Muthoot Finance, can it issue the check like a bank? So no. Okay, that is also true. Cannot, don't. A company with principal business of accepting deposits is not an NBFC. That is false. A company with principal business of accepting deposits is called as a NBFC. It can accept deposits. Now somebody says, sir, but that is called as bank. Bank is obviously there. Bank's business is accepting deposits. But other than bank, even NBFCs can accept a deposit. Okay? So that is true. That is false. Okay? Now let's solve one numerical. Following are the bank details. Insurance income is given as 15 crores. Salaries are given as 10 crores. NII is given as 10 crores. Capital is given as 80 crores. And you have to find out ROE, return on equity. What is ROE basically? ROE, return on equity. Yeah, it is ROE. ROE is basically return on equity. It means, what does it mean? It means your net income divided by your capital. There are 2-3 terms. It is there in your chapter branch profitability. Okay? What are the 2-3 terms? One is ROA. One is ROA, return on assets. ROE, return on equity. Then you have leverage ratio, leverage. Then you have NII, net interest income. Okay, then you have NIM. All these terms are there in your chapter branch profitability. These all terms are there in your chapter. Each one has different formulae. ROA means net income upon assets. Net income upon assets. ROA, I give you just now. ROE means net income upon capital. Okay, upon capital. What do you mean by capital? The money which I have, own money. Okay, so ROA, ROE, leverage. What is leverage? Number of your total amount of assets upon capital. Assets upon capital. Okay, so what is my ROE then? My ROE becomes, see this, net income divided by capital. Okay, net income upon capital. So what is your net income now? How do you calculate the net income? Net income equals to your NII plus fee income or other incomes. Fee income, you can call it fee income minus NII plus fee income minus expenses. Your operating expenses, expenses. Okay, so now get this. What is NII given? NII is given as 10 CR, 10 plus what is your fee income given? Insurance income 15 crores, so 15 CR minus what is the operating expense? Operating expense means salaries. Only one is given. They can give you many, electricity, anything. Whatever is given, take it. Total them. So salaries are 10 CR. So what is your net income then? 15 CR. Upon capital, what is capital given? 80 CR. So my ROE becomes what then? ROE equals to, do it everyone, comment section. I want the answer in comment section. So it is 15 CR divided by 80 CR. Okay, 15 upon 80 into 100 you have to do it. Why? Because you want it in percentage. Into 100%. Okay, so into 100. So that is equal to, do it everyone now. Everyone try this. Yeah. So the answer for this is 15 divided by, what is this? 80 into 100. So it is 18.75%. 18.75%. So that is the ROE, return on equity. Okay? ROE, return on equity. Kindly note this. ROA can be found out using net income upon capital. ROA can be found out using net income upon assets. Okay? So very important numerical and very basic. This time in exams nowadays they are asking all numericals. Among the following, in which of the following case it is not required to be created by the way of deed and doesn't require registration? So which of them does not require the registration and no deed is required? So which of them? Simple mortgage, mortgage by conditional sale, usufructuary mortgage and equitable mortgage. Registration is not required in which mortgage? Think. Simple, conditional sale, usufructuary and equitable. Think over it. Remember the three main types of mortgages are. What are the three main types of mortgage? Very important, main. These are these three. Simple, conditional sale and usufructuary. Everything else what you see, English mortgage, equitable mortgage, all these mortgages, these are under these three. Okay? So here the question is different. See, I just gave you the information that three main basic types of mortgages are these three. In simple mortgage, if you have to take the possession of any security, you have to go to the court and then do it. You require the intervention of the court. Conditional sale. In conditional sale, when you take the property as security, you can't get the income from that property. You can't get the income from that property. Means, suppose if I am taking house as a security, prime security for giving the home loan, the rent of that house will not be received by me as a bank. It will be received by the borrower, isn't it? Suppose if the borrower gives it on rent, the rent will be received by the borrower. That is conditional sale. And I can take the possession in conditional sale only when the customer defaults in the payment. Before that, nothing. Usufructuary is similar to conditional sale. Only the difference is, in usufructuary, the income from that flat, which I gave you earlier example, income from that flat, which the rent is received by me as a bank, received by me. So that's why we don't do this usufructuary. We are not allowed. How can you have the rent of the flat? We always do conditional sale. So this was just an information for the types of mortgages. But importantly remember, what is the answer? Does not require the registration. So which does not require the registration? Who does not require the registration? Equitable. Equitable mortgage will never require the registration. Never ever. Okay? That is just is hard low. Give the documents, take the check, DD or NEFT nowadays. Among the following, which of the following statements are correct in context of financial literacy? Financial literacy. See, financial literacy is very important topic nowadays in banking, isn't it? All our Jan Dhan Yojanas, Pradhan Mantri Yojanas are for financial literacy only. So which of them is correct? Always focus on the question, what do they want? Do they want correct or incorrect? Financial literacy is the process by which people improve their knowledge and understanding of use of financial products and services. It is also described as one's ability to make informed judgments and take effective decisions regarding the use and management of money. The financial literacy is promoted by provisions of financial education and prelude to financial inclusion in villages. Prelude means before. This is the starting point, you can say. So which of them is correct? All of the above. Common sense, isn't it? All of the above are correct over here. Let me see in the comment section, what have you typed? All of the above, no? D. Correct? D is the answer. Among the following, in which of the following case it is not required to be created? Require is done, already done. See, this was the explanation. Mortgage is of three types: simple, conditional sale, usufructuary. Okay? Court intervention required. Conditional sale, the rent is received by the customer. Usufructuary, rent is received by the bank. But nowadays, kindly understand, equitable mortgage, we don't require the registration, but you have to give the notification at the end of the month to the sub-registrar nowadays. That has been made compulsory. Okay? Within 30 days, you have to give the notification. Among the following, which of the following statements is or are not correct? Focus, not correct. The relationship between the customer and the bank, when the bank lends the money to the customer, is the borrower and the lender, and thus a debtor and a creditor. So relationship between the bank and the customer is borrower and lender. Of course, who is the borrower, who is the lender, that we can check. Creditor, debtor. Who is the creditor? Bank is the creditor. Debtor is the customer. Borrower is the customer. Lender is the bank. So the relationship between the customer and the bank is debtor-creditor. So, true. Isn't it? Bank is the creditor, customer is the debtor. The relationship between the customer and the bank, when the customer deposits certain valuables, bonds, securities with the bank for safe custody over here, is bailor-bailey or and thus customer and trustee. Bailor-bailey, what is bailment? What do you mean by bailment? Everyone, what is bailment? Who can answer me? Bailment. Suppose if you are going out, let's say, you are going out for some days, let's say 7 days. Okay? You have a bike or a car. Let's say 15 days you are going out. You have a car or a bike. Now in 15 days, if you don't drive the bike or the car, it creates problems, right? Because 15 days idle. So that bike or car will create problem. What do? You give it to your friend. For 15 days you ride it, so that the car will be running, bike will be running. Why do you give it to the person? Because you feel that the person will keep it correct, in a good condition. If tomorrow that friend sells that bike, then that is cheating. Bailment means that whenever the customer keeps the gold with you or bonds with you under the safe custody, okay? So that is the relationship of bailment. Whenever you give clothes to the iron man, right? Iron, the one who does the iron istri. Whenever you give the clothes to that person, what do you expect? That the person will not burn your clothes, isn't it? Tomorrow if that person starts burning the clothes, then that is the bailment, the trust is gone. Bailment is trust basically. Okay? So thus customer and the trustee, that is also true. The relationship between the customer and the bank, when the bank performs the services of remittance, collection of checks, bills on behalf of the customer, is principal and agent. Is it so? Or is it not so? Suppose if I come to your branch tomorrow and I give you the check. Sir, take this check. Ma'am, take this check. Put it for clearing. So will you take the check and the funds which are received from that check, will you take it into your account, bank's account, your account, or will you give it to my account? For me. So what are you doing? Who is the owner of this money? The owner of this money is me, because it's my account, my check. What are you? You are the agent. So I become what? Principal. You become what? Agent. So whenever we send the checks for collection or anything for collection where we have to collect the money, we act as the agents. So the answer is correct. So all of the above are correct. All of the above are correct. D is the answer. Got it, everyone? Orders received from the court for recovery of certain debts are called as, from the court. Orders received from the court are known as what? Attachment order, NISI, recovery order absolute, attachment order, and garnishee order. What do you call it? Court orders. Court. Yes. Do you call it attachment order, recovery order absolute, attachment order, or this NISI or attachment, or this garnishee from the court? Let me see. Whoever answers this, comment section. Let me see them. Many of you are answering this as NISI. NISI, because you have heard this word NISI. But the correct answer is not this absolute NISI or this attachment NISI. The correct answer is garnishee order. Okay, it is garnishee order. So kindly note, what is garnishee order? Garnishee order is received from the court. Garnishee order is of two types. Okay, it's of two types. Garnishee. This is of two types. One is NISI and second is absolute. Absolute. Okay. What is NISI? In NISI, the court tells you only to freeze the account. Freeze and keep it with you. That's it. Freeze the account, keep it with you. Don't let the funds be withdrawn. Whenever you freeze the account, there can be a credit in that account, but debit is not allowed. So freeze that account. And whenever you get this absolute, in absolute it tells the money should be given to the judgment given. Money should be given to the judgment. Okay, judgment. This creditor means debtor basically. Judgment debtor. So funds should be given to the judgment debtor. Debtor means who wants to recover the money. Court gives the order that yes, this person has the right to recover the money. So you have to give the funds to that person. So you are becoming the judgment debtor over there, and that person is judgment creditor. He has given the loan to you. So judgment creditor also you can call it. It depends on from what angle you are looking at it. Okay, judgment creditor. Got this point? So to the person who is rightful authority to receive the funds. Okay? Among the below given statements, which of the following shows the correct advantages of ECS debit? ECS debit. Now, frankly speaking, ECS is not there in the banking now. This ECS has been replaced by NACH, NACH, National Automated Clearing House. It has been replaced by NACH. ECS is not there. Okay? So what are the advantages of ECS debit? No need of issuing a check to the beneficiary for each payment, and debit is made automatically. No need for issuing the check. Okay? Payment defaults will not happen if there is sufficient balance in the account. No follow-up is needed by the beneficiary, as the payment will be received automatically based on the mandate. Hassle-free for the mandate issuer as it saves the time for him or her for issuing the checks for each time. So which is the correct answer for the ECS? Is it all of the above? Yes, which is the correct answer? What do you think? All of the above. Got it? All of the above is the answer in this. Got it, everyone? Clear? Kindly note this. The same are the points for NACH also. If somebody asks you for NACH, same answer. All the 3 points are same. No need for issuing the check. Payment defaults will not happen if sufficient balance is there. No follow-up is needed. So same answer. No change. Okay, for NACH also. Among the below given statements, which of the following is correct? About the mandate. What is mandate? Mandate and POA are the important terms in the banking. Mandate and POA. What is the difference? POA can be general POA or separate specific POA. General or specific. Means I can give a POA to anyone to operate my account, buy my property, sell my property, take a loan on my behalf. Everything POA can be given. General. And specific POA for specific account only. You are given the authority to operate the account of mine for 1 year. POA. Savings account only. You are given the POA for selling my property only. That is specific POA. Mandate is also similar to specific POA. But mandate is given only for the accounts. See, I can't give a mandate to anyone to sell my property. Specific POA, sell my property. Only sell my property. But I can give a mandate to somebody for selling my property. I can give it. So what do I have to do? Mandate is only for the banking. Operate my account. Mandate. Operate my account. That's it. Operate my account for savings. Operate my account for current. So that is mandate. It is given on the plain paper. Simple plain paper mandate is given. Mandate always has a time. Limited time. Short time. It can be for 6 months, 1 year, max to max. So, which of the following is correct regarding the mandate? The client notifying the bank that he has given someone else permission to manage the account on his behalf, right? The customer will notify you that, see, I have given a mandate to somebody to operate my account. I am going out. For 3 months I am going to USA. I am giving the mandate to my brother, sister, whoever it is, to operate the account. The client doesn't need to verify the signatures on the mandate and obtain them in the mandate letter. Not client, it should be actually bank. Bank doesn't need to verify the signatures on the mandate and obtain them in the mandate letter. So bank doesn't need to verify the signatures. Okay? Institutions can impose a mandate. Mandate can't be issued by an account holder with a direction to his or her bankers authorizing the person to operate the account on his or her behalf. See, can't be issued. Things are confusing. Read it properly. Take your time. I'll give you 1 minute to read this. Take your time. You want a correct one. Want to verify the signature of anyone giving the mandate? You will have to verify the signature. So, definitely, this is false. Institutions can impose a mandate. Companies can give you the mandate. No. Mandate is given by individual only. False. Companies, if they want, they will issue this BR, board resolution. Mandate can't be issued by the account holder with a direction to his. Totally false. Mandate can be issued by the account holder, individual. Huh? This is also false. A client notifying that the bank that he has given someone else permission to manage his or her account. Correct. This is the right answer. Okay. Mandate and POA, you have to study a lot in exam. Definitely questions will be there. So now, all of you, all those who are planning to appear for JAIIB May 26, kindly note. See the new batches of Adda 24/7. Okay, they are still in the starting phase. We are starting a new batch on 20th of this February. New batch, 20th February. So be ready for it. Huge, detailed batch. All the numericals, objective questions, case studies, everything will be covered. Join that batch. Use the code Y432. Okay? Y432. Definitely. See, it's a best batch for you. And now the exam is very near, isn't it? In fact, you can join the increment Mahapack. If you join the increment Mahapack, you'll be getting number 1, 15 plus batches per subject. Per subject, 15 plus. Plus physical question bank. Plus formula bank. Physical, delivered at your home. So whenever you need to read the computers, through computers, read it online, e-books. Whenever you want physical books, read physical. So 15 plus batches, physical question bank, e-books, notes, e-notes are also available. Formula bank is also available. And triple validity offer is going on. You buy for 5 months, you get it for 15 months. You buy for 9 months, you get it for 27 months. So huge it is. Join ASAP. Remember the code. Code for joining is very important. Y432. Y432. Okay? 81% discount plus triple validity plus 15 plus batches. And if you download it through the app, first download the app, then purchase. You'll be getting 1% extra, 82%. Everything is plus plus. Join ASAP.